Hello and welcome to another episode of Stock Talk. Today, we're continuing our coverage of Coinbase. The crypto markets have been as volatile as ever, so we're here to keep you updated and on track. But before we get into it, let me take some time, as always, to say that if you've been following our show and like what we've been sharing with you, please be sure to click like and subscribe below. Your support is always appreciated and helps us stay online and continue to bring you great content you can learn from and rely on. If you remember, Coinbase is literally the largest crypto exchange platform by volume. With over $1 billion in revenue, it operates fully remotely with just over 1,000 employees serving over 100 countries. This represents about 10% of crypto exchange market share. Coinbase has a well-diversified product line. It has both retail and institutional products, ranging from basic Coinbase to Coinbase Pro, Wallet, Visa Card, Prime, and Custody. Coinbase has become so synonymous with crypto that Barron's has coined, pun intended, the term Coinbase effect, referring to the step-by-step correlation of performance in the crypto markets and Coinbase stock. Say what you will about crypto, Coinbase is fundamentally a very good company. It regularly enjoys a healthy influx of cash, resulting in healthy levels of free cash flow to shareholders. Notwithstanding that, when we last spoke, it was sitting on $8.3 billion of cash. Now, debate continues about the long-term viability of crypto. Let's be honest, it's as innovative as it is controversial. But if you ask us, we think it's here to stay. One of the biggest draws to crypto is its supposed diversifying effect. Especially with recent upticks in inflation, many investors see it as a potential inflation hedge. But is it really? No doubt we are bound to find out soon, since despite what the Fed is saying about the recent uptick being transitionary, since our last episode, more Fed governors have started hinting at the possibility of future rate hikes. Even Chairman Powell has shown some openness to the idea, but he assures us we're not quite there yet. Make sure to subscribe to my channel to get the fast updates about the Fed talk on crypto. As he put it, they're at the stage of having the meeting about hiking up rates. Remember that our base case accounts for crypto as a viable alternative in two main scenarios. If inflation remains muted, crypto becomes an alternative that investors turn to in a search for yield. If inflation spikes and remains so for an extended period of time, then it becomes a hedge against not only inflation, but a depreciating dollar as well. Now, whether or not it ultimately becomes a non-market correlated hedge against fiat currency and reserve currencies in general remains to be seen. But what do you think? Let us know in the comments below. Like we pointed out before, Coin is a new stock. It recently DPO'd back in April at 381. It then went on to hit a whopping 429.54 before the crypto crash brought it down to its current price level. Currently, Coin is at about 245, following another sharp decrease in the crypto market just this past week. To put it into perspective for you, in May, crypto markets were collectively valued at 2.5 trillion, yet as of last week, their market cap is at a measly 1.5 trillion. So, is this the end? Well, no, we don't think so. Sure, the stock may be down almost $20 since our last episode on Coinbase, but if we've learned anything from this and other stocks we've covered is that this is a great buying opportunity. And remember, what we said last time, should it dip below 200, buy, and stock up on this stock. But at this point, analysts are fairly bullish on its price target. Many are calling for 388.27 in 1 year. So if you agree, then now is the time to buy. With a 50-day moving average of 238.60 and a 200 moving day average of 260, technical analysts are expecting a bullish chart pattern to emerge over the next 2 to 6 weeks. Other analysts are pointing to a price-to-earnings ratio of 16 to say that this stock is currently cheap and undervalued. Now, this is where timing matters. Ultimately, we're not advising anyone to play the market timing game, but if you are, then here is something you should know. Expecting to hit 309, Coinbase missed first quarter analyst estimates by 4 cents. Analysts have since then reduced their estimates for the second quarter, expecting EPS of just 221. Results come out in just a couple of days, and should Coinbase exceed estimates, you can expect the stock to get more expensive, so be on the lookout and buy wisely. Now, as you may have heard, not everyone is bullish on crypto, or crypto trading platforms for that matter. Earlier this year, a skeptic over at Forbes magazine laid out his issues with it. He made 3 points. First, that the regulatory environment will keep crypto out of the mainstream. Second, that crypto trading platforms are vulnerable to hacks. And third, that Coinbase itself is far too dependent on trading commissions. Now, let's take a pause there and see what you think. Do you agree? Are his concerns valid, or do you think Coinbase will be able to quickly adapt and rise to the challenge? Let us know in the comments below. But also, let me give you something to think about. Just last week, Coinbase launched Solidify, which is a process that they say will, and I quote, automate, standardize, and scale their due diligence process for new token listings. This is particularly helpful in helping them detect risks in Ethereum smart contracts. So, within a matter of months of going public, they are already unveiling systemic upgrades and process improvements. Clearly, Coinbase is showing itself as a fast mover with great adaptability in a changing market. If they can do this for new tokens, who's to say they won't be able to protect against hacks or other security risks? And as it stands, no one has yet been able to successfully hack into Coinbase, and there have already been attempts. Clearly, this is not concerning many traders and investors, as Coinbase's user base has only been growing since it went public. In fact, Coinbase has been growing so well that also last week, it entered the Japanese market, one of the largest trading regions in the world. And Coinbase has had an eye on them for some time now, having been hiring a lot of new employees in Japan in preparation for its entry into the market. We'll have to see how this plays out, but we are willing to bet it will pay off. After all, Japan has been mercilessly struggling with deflation for more than 2 decades already. Maybe greater access to cryptocurrency will help investors diversify and achieve more yield. What do you think? But just as their activity is happening abroad, there is activity happening here back at home. Already, 4 large American banks have confirmed that they will provide some form of cryptocurrency services to their customers. 2 other banks are also considering doing the same. JP Morgan Chase, Goldman Sachs, and Bank of America are starting with making crypto futures trading available to their customers. Previous to that, BNY Mellon had actually begun crypto custody services for its clients. Now, let's pivot for a bit. The crypto market itself is huge. In fact, according to Coinbase's co-founder himself, 90% of tokens and NFTs will fail within 3 to 5 years. But this isn't deterring central banks. After cracking down on cryptocurrencies nationally, the Chinese central bank has ironically started to consider creating a cyber yuan. Similarly, at the Fed, talks have begun about issuing a CDBC, or a central bank digital currency token. In fact, Chairman Powell has gone on record saying he wants the US to play a leading role in setting international standards. But, oh no, what does this ultimately mean for DeFi, or decentralized finance? So much for the democratization, right? What do you think? Is this flying in the fact of the whole point of crypto? Do we run the risk of legitimizing central banking crypto, driving all other coins underground to some sort of gray market? Do you think central banks will even be able to attract the same intellectual capital to develop and mine these currencies the way the tech industry does? Fun fact, at some point in history, paper checks and debit cards were debated by economists as to whether or not to include them in the concept of money supply. They eventually were included. What historical implications do you think that has for crypto? Maybe it's actually inevitable for it to be legitimized, if not actually become institutionalized. Leave us your thoughts in the comments below. Let's get a discussion going. Ultimately, there's no sure way to answer any of these questions right now. The overarching question is, will crypto gain enough widespread adoption that Coinbase remains a major player in a new tech-advanced economy? What other innovations, risks, and challenges will arise? We'll continue to stay tuned and we'll find out together. As always, thanks for watching. And if you enjoyed the show, be sure to give us a like and subscribe to our channel. See you next time.